that there was a lot of leverage in the marketplace going into this year, and leverage helps on the way up. But as the market rolls over, we see some unwinding of that leverage, and I think that's what we saw. I mean, we saw each of the last 3 days of last week, the market closed on its lows of the day, and I think we saw some of that, those margin calls and things like that to kind of cause the forced selling. Yesterday we saw it again, and I think once that finally kind of got washed out and people were done with that, there was nobody left to sell, and that's why we got this major snapback rally.
Well,
the concern though is that.
Matt, are people done with that in general? Was that capitulation? Have we seen it?
That's the big question, Matt, because and I don't think it is. We had massive levels of margin debt going into this year. It has certainly come down some, but it takes time for that to get unwound. We've seen that in 2018. We had record levels of margin debt. It took several months for that to get worked off. It doesn't just happen overnight. And so I do think that yesterday's bounce will be one that will probably. The futures are down today, but they're down about half as much as they were. An hour or so ago. So I think that bounce should last a little while, but I do think we'll see, more volatility and probably lower lows. So I think we've gone from a situation that on a near-term basis that people need to sell the bounces rather than buy the dips.
I hate to ask you kind of the horse race question, but it begs to be asked, how much lower could we go? I mean, before that margin is all unwound, where do we end up?
Yeah, I think when this whole thing kind of came around, especially around November and December, when the Fed really started signaling they were going to be much more aggressive with their tightening, I really thought we'd see a deep correction in the S&P 500 take us down 15 to 20%, and I still think that's probably going to be the case, which of course take the Nasdaq down even further. The thing for investors right now, though, is so important is that maybe raise a little bit of cash, not a lot. You don't have to raise 25% cash, but you raise a little bit of cash on the bounces, and therefore, my point is, embrace this situation. They're healthy, they're scary, but they're also normal, and like I said, healthy. And if you're the ones who can embrace it, you'll be the one who's keeping your head while others are losing theirs at the bottom, and you won't be selling right at the bottom with the absolute worst time. You'll be the one who has the confidence to buy.
Matt, in the context of that, if we're right-sizing monetary policy right now, if that is what the Fed is trying to do,